Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, new support for Algoma Steel. How far will it go? And the root of Canada's economic woes. They are not new, but the solutions may be at hand. Plus, a tariff on non-U.S. made film has Canadians on edge. That's all ahead. But first, for the week that was in business, it's time for the briefs. A slightly more rosy view of the Canadian economy was offered up by Deloitte Canada this week. It sees the country skirting a recession with modest growth of just above 1% this quarter and about 1.5% in the last 3 months of the year. Deloitte does expect the Bank of Canada to cut rates again by year-end to 2.25%. $500 million of government loans will help Algoma Steel move quickly to its electric arc furnace technology. With $400 million from the feds and $100 million from the province of Ontario, the company is currently producing more steel than it can sell, thanks to U.S. tariffs. The arc furnace is more nimble and allows for smaller production batches. New U.S. tariffs are targeting Canadian lumber at 10% and also a 25% tariff on finished products from cabinets to upholstered furniture. It appears there will be no carve-outs for goods that are compliant with our current trade agreement. The duties are slated to kick in on October 14th, but could rise next January as high as 30% on furniture and 50% on cabinetry. OpenAI's ChatGPT has struck a deal with Canada's Shopify to offer a purchase option from inside the chat function. Along with specialty retailer Etsy, Shopify's products will be linked in response to search queries or agentic AI task requests. The agreement will give Shopify's merchants immediate access to a new platform for reaching customers. Imperial Oil plans to reduce its workforce by as much as 20% by the end of 2027. It's part of a restructuring at the energy firm that would affect about 1,000 workers. Imperial will take a charge of around $330 million this year to cover the cost of the cuts. Federal Energy Minister Tim Hodgson weighed in on the layoffs, calling the news disappointing. Minimum wage rose this week across 5 provinces. As of October 1st, base pay got higher in Ontario to $17.60 an hour, PEI to $16.50, Nova Scotia also $16.50, Manitoba at $16, and Saskatchewan at $15.35. Alberta is a standout with no increase in minimum wage since 2018. The rate there is $15 an hour. And those are your business briefs. Algoma Steel became the first big recipient of the federal government's large enterprise loan facility this week. Is that enough to see the steelmaker through the tariff storm? Michael Garcia is CEO of Algoma Steel. Thanks for being with us.
My pleasure, Amanda.
So let's start right there. You did get a total of $500 million at a time when you're reporting that you're still running net losses here, EBITDA losses. Is this enough to see you through a period where you can't count on U.S. sales?
Well, it's certainly a key piece of meeting the challenges that are facing Algoma Steel and really facing all of the steel industry in Canada right now. It won't solve the problem in and of itself, but allows us the time to take the steps necessary and to allow the conditions to improve to allow us to see us through this. What we've got to do right now is reduce costs as much as possible and pivot towards a future, stronger, more attractive Canadian market while allowing also, frankly, the Canadian and U.S. governments to continue talking about the trade relationship between the two countries going forward. And I think the ultimate solution that we're looking for is a restated or a new trade relationship with the U.S. that involves Section 232 tariffs at much lower levels than 50%. The problem is we can't forecast exactly how long it will take for us to get to that. Mm-hmm. It won't be anytime soon, but that's going to be part of it. And then the other part of it is diversifying and pivoting and continuing to become a very low-cost competitive steel manufacturer to meet the demands of the future Canadian market that I think will continue to grow as the new government in Canada pursues all of the projects and development in the actual Canadian economy itself, regardless of what our trading relationship is with the U.S.
Yeah, the government's definitely, the Buy Canada is supportive of the domestic producers and literal dollars. Are they asking you for assurances on jobs that you won't be forced to make any layoffs in this period?
Look, when we undertake a government loan of this size, we have to be completely transparent with the government of Canada about what our business conditions and what our business plans are. And they simply wouldn't be responsible to give us a loan of this size, not understanding what we plan to do with it and how we plan to meet the moment. They know that we are transitioning to electric arc furnace. They understand that the electric arc furnace transformation will cause the company to look different than it looks now, and that includes things like jobs. But they also know that it's part of the critical future of Algoma Steel and a very competitive and lower cost and greener steel industry in Canada. So they're aware of that, but they also know it takes time, and they also know these are significant impacts on our employee base that we're going to be responsible about managing.
You are in a pivot here to that new technology, and the nature of this large loan was that you're vulnerable. I mean, that's the only way to qualify, was to show that you're vulnerable. Are you vulnerable also to a takeover or any other kind of business outcome that's beyond your control?
Well, we typically don't speak about any takeover plans, rumors, or vulnerability. But I would say, as a public company, our shares are for sale every day. And so anytime you run a public company or a public company exists, if somebody with a lot of money believes that your shares are critically undervalued, they can start acquiring those shares. But I would just leave it there and not say anything more detailed than that. Fair
enough. It's been a rocky road, obviously, with everything that's going on. As you say, we want those 232 tariffs lowered, if not removed. What's your timeline when you look down the road? How long can you continue? You have this new infusion of capital. You have a pivot to technology. What does it look like in terms of where you need to get to some more stable place?
Well, what we've done with this loan and with the accelerated transformation to electric arc steel making that we've announced is we've built a liquidity bridge, or a bridge as far as we can into the future, and we think that's a multi-year bridge in 2.5 to 3.5 years that will allow us to continue to do the hard work to meet the needs of the future Canadian market. And it'll also allow the Canadian government to have substantive discussions with the U.S. government about the trade relationship going forward. We certainly hope it doesn't take any longer than that, but we feel good about our liquidity over that time range.
So good to have you, Michael. Really appreciate your time today.
My pleasure, Amanda. Thank you.
Michael Garcia is CEO of Algoma Steel. Coming up, there's a lot to fix when it comes to Canada's economy. We'll break it down after this.